Well, is housing history repeating itself? The government pushing Fannie Mae and Freddie Mac to expand mortgage help for low-income homeowners. Sounds a lot like, to me, the beginning of a new financial crisis all over again. To former Fannie Mae executive Tim Rood, who may have a different view. What do you think, Tim? Is there any danger in this?
Hi, David. Yeah, I mean, honestly, I'm obviously a big fan of housing. I think that, any opportunity we can afford somebody who can actually repay the mortgage, be given those opportunities, removing barriers. The challenge with this is, I mean, this is like 1992 called, and they want their housing policy plan back. We're not being very creative around how to achieve these housing goals. The administration that's actually, or the regulator over Fannie Mae and Freddie Mac, is really pulling the only lever that they can. They can't affect the macroeconomic growth of the country and wellness of individuals' prosperity, but they can pull this lever and create quota systems for the GSEs, Fannie Mae and Freddie Mac, to do more lending to distressed or to
But the bottom line here, and I think we've discovered this, despite the intentions of the administration in power right now, is that social engineering really doesn't work when it comes to housing. That's what we learned in 2008 and 2009. The unintended consequences led to disaster in this country, and you're treading on very thin ice when you go out in that direction. It seems like that's what we're doing right now.
Yeah, unfortunately, I think that we've forgotten all of the issues related to moral hazard. You've seen it on the student loans. I've never heard of this thing. I was reading a Wall Street Journal article yesterday around income-based federal repayment plan. Wrap your head around this. You take out a loan for your student loans, not dissimilar to mortgages, and then when you realize you can't pay it, then the federal government steps in and either crushes the payment or the taxpayers step in and subsidize the payments. It's craziness, because what you've learned long ago is that if you focus on the parachutes in these credit paradigms instead of the penalties, you get a lot of irresponsible behavior.
Well, the bottom line is they're creating an arbitrary number here, Fannie and Freddie are. 24% has to be low-income housing. When bureaucrats form these arbitrary numbers that they try to reach, they don't pay attention to the consequences of trying to go to those numbers. They just go there, come hell or high water, and usually we have to deal with the hell and high water.
Yeah, I mean, politics and press releases, I think, compel a lot of people to do funny things in this town. However, there is some value in these quota systems, provided that you're being a little more innovative, again, than we were in 1992. You've got to create situations where these at-risk borrowers have a sustainable situation where you have a partnership with the lenders. That can't just be creditor and debtor relationships. We've got to be more creative.
We learned that. You got to have a part. People have to hold on to the mortgages, banks or whomever issues those mortgages. Tim Rood, former Fannie Mae executive. Thank you very much, Tim. I appreciate it. Right now.